Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Cheryl D'Souza. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But first up, let's take a quick check at where the markets are at. Cheryl, Nifty was holding on to this 25,400 levels, but in the last 45 minutes, it has nosedived. It's actually below 25,400 now, and also it's Nifty Bank where the outperformance is coming from, trading with solid gains of around 600 odd points.
Absolutely, Ankita. If you had to see the markets in the morning, you'll be amazed to see the markets right now the way where they are at this point in time, because we did hit a fresh record high level on an intraday basis when you talk about the Nifty. But from there on, we've given up all the gains. There you go on the bottom of your screen. You can see over 120 points drop coming in from the day's highest point for the Nifty. You have Sensex also that's under pressure. The broader markets, the cuts there is pretty sharp when you compare it to the benchmark indices. But like Ankita rightly pointed out, that the shining beacon today has to be the Nifty Bank, because solid outperformance coming in from the Nifty Bank when you compare it to the benchmark indices. No doubt that indices also is off the day's highest point, but nevertheless still holding on to strong gains about 1%. One sector that you have to take note of is the IT sector, because that one is under immense pressure in trade today. Almost all of those Nifty gainers, top Nifty top Nifty losers are from the IT pack, and there you go, IT sector down about 3%. In a short while from now, we'll tell you why the sector is under pressure. But not only about the sector, we'll talk about all of the stocks that are in focus in trade today, isn't it, Ankita?
Absolutely, Cheryl. So without further ado, let's get started with all the stocks. Then let's get Ria on board, who is joining us from the research team, and let's get started with all the stocks. We also have, on our technicals, we are joined by Nagaraj Shetti. Thank you, both of you. Good afternoon, and let's get started with all the stocks that are buzzing away in trade. So first up is Hindustan Zinc. Now, Hindustan Zinc is likely to spend around $2.5 billion, or 2,000 crore rupees, for its upcoming expansion plans, which will double the company's annual output to 2 million tons. Now, the expansion work will begin by the first quarter of financial year FY26. Now, according to the media reports, from July, Hindustan Zinc had hired two Australian mine planning and mine contracting firms to develop a plan for doubling the capacity of its mines. Now, the company also roped in a consultant to work on expanding its zinc smelting capacity, a mix of greenfield and brownfield diversification. That's also something that the CEO had mentioned, that the expansion will be brownfield with the existing mines, while the greenfield will be a new smelter with up to 0.6 million tons capacity. On the back of that, Hindustan Zinc is in focus today. In fact, it has given up those morning gains. It's seeing a decline in trade right now, trading with cuts of 1.2%.
All right, let's put the spotlight then on the auto pack. It's Bajaj Auto that is in focus in trade today. Remember, the Bajaj Auto yesterday had a launch, actually went ahead and launched two new bikes. One was an upgraded version and one all-new bike coming in from Bajaj Auto. But the stock is under pressure. That's because CLSA has come out with a note maintaining an underperformed stance with a target of about 7,000 rupees per share. They're saying that Bajaj as well as Triumph have launched two motorcycles positioned as entry-level motorcycles, and they believe that one of the bikes, that is T4, has hit the right spot in terms of price and performance. They're also saying the launch looks promising, but they are remaining cautious on the stock on back of the increasing competitive intensity in the premium motorcycle segment. They're saying the growth moderation in the sub 250cc motorcycle segment and the continued pressure in the key export market is one of the reasons why they're keeping a negative stance on Bajaj Auto.
All right, that's Bajaj Auto in focus. But let's keep with the auto sector then. Now, auto sector is no longer cheap. That's the word coming in from S. Narain, who's the ED and CIO of ICICI Prudential AMC. And what does he believe? Why is it not cheap, and what is the rationale behind it? And what does he think about the two-wheeler space in specific? Let's go across and listen into what he had to say.
I think these are all cycles which play. So, two-wheelers was a sector which had done very badly from 2019 to 2023. So it was ripe for a rally. If you look at entry-level cars, they continue to do badly all the way for the last 4-5 years. So at some point of time, there will be a pickup. Now people say used cars take care of entry-level cars, but at some point of time, they'll come back. So I think everything is a cycle, and in these cycles, if you manage to catch the point of maximum pessimism or cheapness in stocks, you'll make money. And that is our approach, and that's how in two-wheelers, in some of the stocks, we actually made good money in our funds. And when auto was doing badly, we did launch the transportation and logistics fund. And the investors in that fund made very good money. But today we are not, I mean, we are no longer in that cheap zone in auto at this point of time.
All right, so that's the view coming in from S. Narain on the auto pack. But let me go across to Nagaraj and then good morning, beg your pardon, good afternoon, Nagaraj. The first stock that you're going to talk about is PFC. How is this one looking on the charts to you?
Hi, good afternoon, Sheryl. PFC has been in a continuous downtrend over the last couple of weeks, and what we can observe in the long-term charts, the long-term uptrend remains intact for this stock price. We have seen higher tops and bottoms on the weekly chart, and recently this stock has made a positive double bottom kind of a pattern around 485, 488 levels and bounce back. I'm expecting this to be another higher bottom or a double bottom formation for this stock, and this stock is likely to bounce back from here onwards or from slightly from the lower onwards. So next overhead resistance we want as per this pattern is around the 550.
All right, moving on then. Coming to you, Ria, you picked up Bajaj Finance for us. Tell us what's the news flow. I believe there's a brokerage note that's come out in Bajaj Finance. Tell us what does it say?
Yes, well, so Morgan Stanley has come out with a note on Bajaj Finance maintaining an overweight rating on the stock with a target price of rupees 9,000, saying that they are now focusing on the standalone financials, which is going to gradually increase, and they are expecting the company and the investors as well to largely focus on the consolidated metrics in the immediate term. They've also said that they are trimming the FY25 to 27 consolidated EPS estimates by 1.2 to 1.6%, and they also find the valuation attractive relative to the ROE and the EPS growth, and they further said that they are preferring to wait to see the stock performance of both the entities to also be able to judge the level of holding of the holding company discount. And right now, on the back of this brokerage note, the stock is up over 3%.
All right, so positive note or bullish note coming in for Bajaj Finance. The stock is seeing good gains in trade today. But let's talk about stock that you should be holding in your portfolio for the longer term. What sort of strategy should you use? Let's hear out what Devin Chokshi had to say.
I think the entire TVS group, we have been holding for more than 30 years now. Bajaj Group, we have been holding for 30 years plus 40 years in fact for Bajaj Group. Reliance has been in the portfolio for the last 25 years plus. So yes, I think you hold these companies in the portfolio largely because of the fact that I think their businesses are steadily growing. We are not looking at, I think, very exceptional return. Like on one side, the HDFCs and the Bajaj kind of companies, particularly the finance fields, I think they have been growing at a compounded rate of 30% in their early years, and they continue to do so in some cases. In case of Bajaj particularly, they continue to do so. The southern-based companies, I think they would probably grow relatively slower. They would grow between 15 to 20%, but they still grow between 15 to 20% in their business, and that is more important. We actually look at, I think, how much of the free cash flow these companies are deploying in building the capacities for future.
All right, moving on. Nagaraj, coming to you. You picked out Devyani International for us. Last 6 months, 25% returns, but last 1 month it has been fairly range bound. Tell us, where do you see this stock going?
I'm expecting further up move for this stock. Artically, it's looking attractive as it's showing like a rounding bottom type pattern at the levels, at the lower levels, and the overall chart pattern is looking positive. We have seen on the weekly chart higher swings of upside and downside. The downside has upside has started after a downward correction. I'm expecting more upside to come in the near term, and the next overhead resistance to be watched is around 220.
All right, moving on then. The next stock on the radar is Hindalco. Now, Hindalco, plans to start solar module manufacturing, and they're likely to set up a plant in the western state of Gujarat. That's the news coming in through agencies, and the company is owned by cement to fashion retail conglomerate Aditya Birla Group. Now, it is evaluating a 5-year plan in the competitive sector, and also Hindalco has identified the land in the port town of Mundra in Gujarat. Hindalco is also yet to get the board approval and finalize its capital expenditure on that. But for now, sources say that they're likely to set up a solar module manufacturing very, very soon in the state of Gujarat. And in the back of that, Hindalco is in focus today. Right now, it is trading with cuts of 0.8%.
All right, let's put the spotlight then on LTI Mindtree. Like I said, the entire IT sector is under pressure in trade today. We will have Ria tell us exactly why is that. But before that, let me talk about LTI Mindtree. Why is this one in focus? Because Citi has come out with a note where they're maintaining a sell stance with a target price of around 5,635 rupees per share. They're saying that they've met the CFO of the company to understand the senior level attrition trends, the demand outlook, as well as the TCV trends and the pricing. They're saying they continue to reiterate that Q2 revenue growth trend will likely be similar to that in Q1. They believe that the margins will likely see a continued pressure as the growth is moderate and also from cost takeout deals as well. So that's the reason why they are maintaining their sell stance on LTI Mindtree. They're also saying that the management is not seeing a pickup in the discretionary spend. The customers are very selectively doing work on the regulatory front. So on back of that, you have LTI Mindtree that is under pressure, particularly because there is a note coming on from Citi where they're maintaining a sell stance on the company with a target price much lower than the current market price.
All right, coming to you, Nagaraj, then. Angel One is the name that you've picked out for us. Now, this stock, it hasn't done much in the last 6 months, but it is in the last 1 month that we have seen the stock really move up. Tell us what is the upside for this?
Yeah, I think the intermediate downtrend of this in the stock price seems to be over. The stock has reacted on upside, and current chart pattern is indicating an important bottom reversal for the stock around somewhere around 2000 to 2050 levels. Currently placed at the resistance of around 2030, 2040. I think the overall chart pattern is indicating the chart setup as well as the volume breakout, and RSI is indicating that we are likely to see a decisive upside breakout around the 2650, 2700 levels in the near term. So the next overhead resistance to be watched for the stock would be around the 3000.
All right, then on that note, we slip into a break on this edition of Market Fatafat. When we come back, more stocks to discuss. Don't go anywhere.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. So let's resume then. HUL is a stock that is in focus because if so to be believed, HUL will bring its global beauty brand Hourglass, marking its entry locally into the luxury cosmetics that lately received a disproportionate attention from MNCs and local D2C players and international brand offerings from the likes of Tira and Nykaa. Now, this was founded in 2000. Hourglass is a cruelty-free premium cosmetic brand which was acquired by Unilever in 2017. Now, a high-end makeup and skincare brand, it will be sold through HUL's own counters at beauty and departmental stores and e-commerce channels. So, looks like, Cheryl, we have one more beauty brand to choose from, as if there weren't many in the market.
Exactly, beauty brand to choose from. But yes, given the fact that this one is definitely a premium product, so watch out for this brand new product on the shelves. But let's move on then and let's talk about L&T. And L&T is in focus because Goldman Sachs has met the management, and post the management meet, they've come out with their report where they're maintaining a buy stance on the company with a target price of 3,700 rupees per share. They're saying the management remains constructive on the capex outlook in India as well as in the Middle East area. They're saying on capex intensive private investments, management is seeing a revival in metals as well as in the mining sector. They've highlighted data centers, semiconductors, green hydrogen and potentially nuclear as large long-term opportunities. So on back of these commentaries coming in from the management, Goldman Sachs has maintained their buy stance on the company.
All right, that's L&T in focus today. But Nagaraj, Bandhan Bank is what you picked out for us. Now, this counter in the last 1 month has been, Nagaraj, very, very range bound. Tell us, is this time that it will break out of the range?
Yeah, this stock was underdog over many months. It has been underperforming in the market. And recently, we have seen some accumulation is going on at the lower levels, around 195 to 200 odd levels. And the stock, after the consolidation, has broken above the consolidation recently. I think the overall chart pattern is indicating that this Bandhan Bank is likely to surge further. So from here onwards, I'm expecting further upside, and the next overhead resistance to be watched around 230.
All right, so that's about Bandhan Bank, but let's hear out S. Narain's take coming in on the entire financial space. Is he positive? And if he's positive, then what's his rationale?
The financials underperformance is primarily because of the FIs being overowned in that segment. And what happened was the benchmark for them, which is MSCI, had a very low weightage in financials. And they were very overowned. If you look at the period from 2021 onwards, they've been the only segment which has sold. So they were overowned that segment, and thanks to low weightage in financials in their MSCI index, and they've been selling. I think by the time November happens, the benchmark weightage in financials would have gone up substantially. So the key reason for the selling in financials comes to an end by November. So I don't think it was an economy issue. I don't think it was a valuation issue. It was an excess holding by FI issue, and that excess holding by FI issue is coming to an end. So that's one of the reasons why we are so positive on financials. The only challenge with financials being your most positive sector is it is not a defensive sector. It would be always good, like in 2007, we used to be positive on consumer staples and pharma when the market was very bullish, but those sectors are very defensive. So to be bullish on those sectors was very easy. Whereas to say that you're very positive on financials is a little bit of a problem because everyone knows it's an economy sector, it's a leverage sector.
All right, moving on then. Ria, you've picked out a NTPC for us. Tell us why have you picked out this counter?
Yes, so some big announcements coming in on NTPC after the government has accorded their approval for the NPCIL and NTPC JV company called Ashwini to build, own and operate nuclear power plants in India. And additionally, the government of India has also approved the transfer of the Banswara Rajasthan atomic power plant from NPCIL to this new JV company. And the government in fact has also approved the exemption to NPCIL to invest more than rupees 500 crores, and NTPC has also received an exemption to invest more than rupees 5,000 crores in a single JV or subsidiary company, and this is going to enable the company enable adequate financing for accelerated nuclear power capacity addition in India. And NTPC is the stock is not reacting a lot; it's trading on a flat note, but we're definitely keeping an eye out for the stock.
All right, that's NTPC in focus today, but SpiceJet is in focus yet again. The trouble for this, this aircraft company doesn't seem to be getting over. It is trading with cuts of now 5%. SpiceJet has revealed that it has not paid around 220 crore rupees in tax deduction at source TDS from employees' salaries between April 2020 and August 2023 to tax authorities. Now, additionally, the airline has also owes over 135 crore rupees in PPF payments to its employees for the same period. Now, the airline's preliminary placement document, or the PPD, filed with the Bombay Stock Exchange, SpiceJet said that about 72 crore rupees of TDS for the assessment years 2009-2010 to 2013 to 2014 is disputed. It is also listed that considerable dues in customs, service tax and goods and services tax has been disputed. So on the back of that, some more fresh trouble for SpiceJet. It is trading with cuts of 5%.
All right, so that's SpiceJet under pressure, but let's talk about the new age tech stocks that have been on a tear, but are there more legs for this rally to continue? Let's understand the road ahead for these counters. Let's hear out the opinion from the likes of Ashi Anand as well as Sunil Subramaniam.
The story of the future is coming through. So even if you say buy 5 of these and 1 or 2 of them pay off, it'll pay off on the risk reward framework. So I think it's a combination of those things, that there is excess liquidity also available, and liquidity always finds its levels, right? And that's what is playing off here. Second is the path to profitability you mentioned. I would say that these businesses take time to build core potential. And I think when they were launched, there was hype. And then you saw that the actual realities were not catching up. But now you're seeing that the world is changing, that the businesses that Zomato and these Nykas and these companies are actually getting ground level.
These companies are not only going to turn profitable, but they're actually going to turn highly profitable over the longer term. Now, when we're looking at valuations and after the very sharp run-ups that you've seen over the last year and a half, at current valuations, is this still kind of scope ahead? We actually very strongly believe so. And I think to understand valuations, you really need to look at what's happening in the underlying, what's happening in the underlying industries. each of these companies are basically solving better ways for people to transact across industries. And this is something that we believe is just the start. It is a multi-year. We believe that growth rate should actually continue very strongly over the coming decade.
If you like this video, then like, share and subscribe to ET Now.